Welcome to Traders Corner. Joining me, as always, on the show is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, today the markets are closed in the United States for the Independence Day celebrations, but there's quite a lot to celebrate, actually, with regards to the trajectory that they've been on in the last couple of weeks.
Yes, well, that's it. Look, the US market does remain relatively firm, but having said that, if you look here, this is the chart of the S&P 500 at the moment, and we say this each week, but this 2,400 support level has been significant. The break above that area in late May was a bullish break. And for the most of June, really, this market has just been tracking along sideways in quite a choppy fashion. For most of the time, the trading action's been between 24.20 and up to about 24.45 or there and thereabouts. It's touched 24.50 twice in the last month. But there and thereabouts, and you can see that it's just choppy action. There's no particular excitement there right now. It is a bit of a consolidation in time, if you like, or correction in time. But what's quite interesting to note is that this 2,400 support level is quite significant, and it's becoming a double support area now. You've got that dotted line over there, which is the lateral support through those prior highs earlier in the year, and then you've got the uptrend that goes back to February. In fact, it goes back further than that, but I've just pulled it in on a relatively recent time frame here. And you can see that that uptrend also is now beginning to come in close to that 2,400 area. So if we do see the S&P 500 coming back and testing that 2,400, I would think that it finds fairly strong support at that level and could actually bounce a bit from that level.
Yeah, I mean, I was talking about celebrations, I guess, because yesterday I was looking at some of the performances for the year, and I suppose the Nasdaq is really the market that has outperformed thanks to the exposure of the tech stocks. But by and large, they've had a really good year if we look also at comparison to ourselves. So maybe the short term has been a little bit choppy, as you say, but given that the trajectory has been so good from the start of the year, would you then assume that there's more likelihood of it rallying if it hits that average rather than breaking below it?
Yeah, I think you've got to give the benefit of the doubt to the trend, and the saying or the cliche is that the trend is your friend, but it is. And I would suspect that if we come down to that 2,400 area, I would expect the market to find some support then. If we did get evidence of a reversal up off of that area, then possibly I would look for a bounce from there. I think you've got to respect the trend whilst it's intact. You can't prejudge it and assume it's going to break. I think respect the trend that is clearly intact here.
Yeah. As far as the local market is concerned, the trend is all over the place and it's influenced by the rand, as we saw yesterday and again today.
Yes, that's right. It certainly is. It's been quite significant over Friday. We saw the rand weaken, and then yesterday being Monday and again today, the rand has weakened a bit further. And that's been propping up our top 40 index. Obviously, because we have pretty much the top 5 or 6 shares on our market are all heavily currency sensitive, and those 5 or 6 shares make up about 50% of the weighting of the top 40 index. But also on an indirect basis, in total about 70% of the top 40's revenue is now generated offshore. So it's very much a rand sensitive index and to a large extent a rand hedge index. This is the chart of the top 40 future that we've got up in front of us here now. Last week I talked about this bear flag pattern and said that it looked as if it was potentially setting up for another leg to the downside. I still think that is a possibility here. Last week, what was it, Wednesday, I think, or Thursday, we had that very big bearish engulfing candle that it was a daily trading range there, I'm pointing to it now, where we had a trading range of 1,000 points on the day, and there was a massive big bearish engulfing candle, and it looked like from there the market was likely to go lower. And then the rand began to weaken, and that's propped us up. But overall, that bear flag structure still maintains, I think it's still valid, and I do still think there's a potential for a break to the downside at some point here. But let's see. I mean, maybe it goes to 46,500 or a little bit beyond that area first before it then reverses down. So time will tell. We do have an option structure intact here. It's a bear structure or put spread option structure on the top 40 index, and we did this a while back, and you can see the payoff profile of that structure on the right hand side of the graph over there. So the best area for us would be at about 46,000, and that is where we would want it to go towards the expiry in September. We did buy 2 All-Me futures for the September contract at 45,820. So we kind of long some futures, but also short a whole bunch of short via these option structures. So we've got it fairly well covered at the moment, but the closer the market can stay to 46,000 throughout this quarter for us, that would be the ideal situation in terms of our September futures closeout.
I don't think other traders would share your view there because they'd want a little bit more activity because it has been so tough to trade, so they'd want a bit more volatility.
Yeah, I don't mind a bit of volatility as long as it gets towards that area in September when our option structure expires. That would be ideal.
Okay, well, let's talk about some individual trades, Garth. And before we talk about the position that you've taken in this week, it's Sibanye Gold. And unfortunately, this has just not worked out.
No, it hasn't. So we went into this trade in early June, so about a month ago, in fact. And the reason for it was that the company went about a rights issue in order to raise funds for the Stillwater acquisition in the US. And that caused pressure on the share price of Sibanye Gold, and you can see it quite clearly on the chart there. And typically what we notice with these types of things is once the rights issue is over and the rights stop trading, you will often see a bit of a rebound in the underlying shares. And we've seen it in a number of other examples. The one that we cited at the time of doing this was Life Healthcare, which did a very similar thing. And Life Healthcare did have a nice strong rally after the rights issue was completed. And we suspected that something similar would happen to Sibanye Gold. Unfortunately, it hasn't really happened in the same fashion that I would have liked to see. And it's caused me to actually go out and close the trade this week. We went in at 15.80 Rand and we bought 1,350 CFDs. My stop loss at that stage was below the lowest point of that sell-off during the rights issue, which I think was at about 14 Rand or thereabouts. And I was looking for it to possibly move up towards 18 Rand or 20 Rand. It didn't get there, and as you can see, the price has been very lethargic since then, and it's actually broken below the bottom end of a triangle structure here in the last couple of days. So I decided on that to exit at 15.70 Rand when it broke to the bottom end of that triangle structure. So it means we lost 243 Rand including costs, which is really nothing serious. It's a pity that it didn't work out, but the loss was very, very small.
Yeah, it's more the frustration, and I suppose it's actually moved south, further south since. So to some extent, it's a good thing that you got out now. And and this is, I suppose, charts can tell you all manner of things, but then you get a mining charter, and the gold price comes under pressure, and everything kind of goes against the company. And what do you do?
Yeah, exactly, and that's it. We don't always know what the future is going to hold. We can make predictions. We can look at what I always deem to be high probability trades, but the point is it's high probability. It's not guaranteed. And hence why we always trade with a very carefully sized position, and why we always have a stop loss in place so that we know what we're in for if it doesn't work out, and our losses will always be contained. If we knew with absolute certainty, then we wouldn't need stop losses. But the reality is we never know with absolute certainty. It's a probabilities game.
Sadly. All right, well, let's move on to this week's trade, and that is a short position that you're taking in BarloWorld. Now, I wouldn't have thought BarloWorld is the most exciting stock to go short of, or long for that matter. So why are you looking at this one?
Yeah, it's based on the technicals as I see them, and to me it looks as if the stock is beginning to roll over. There's a big rounding top pattern forming over here. So if you have a look at this graph, you'll notice that the upward trend that's been intact since early 2016 has actually been broken to the downside now during June. And also you can see quite clearly that very large rounding top pattern that's evident over there. And usually in my experience, when you see these types of patterns, they usually do eventually move further down and begin to actually pick up a little bit of momentum on the way down. So if I zoom in and just have a look at a little bit more closely in this trading action, now we're looking at basically the year to date for 2017. What's evident here is that the stock broke below lateral support at 111 Rand in middle of June. And you can see that break to the downside quite clearly. Now, what seems to be happening over here, to my eye, is a bear flag is forming over there. And we're looking for a move, basically. It's moving higher today. I've got in at 112 Rand to go short. But I would expect, just eyeballing that setup, that a break to the downside is quite likely here. I'm looking at this sort of with a medium-term view. So, and hence my downside targets are quite a lot lower. I've gone short at 112 Rand 20 with a stop loss above 120 Rand. So the stop loss is fairly wide and fairly loose. And my expectation as we look for a break to the downside here, first target would be the round figure at 100 Rand, And then quite possibly below that, I see potential for the share price to go all the way down to 90, where there's a big level of lateral support.
Okay, I mean, because how do you isolate those levels if 90 Rand, for example, is the target that you've got there?
Yeah, well, if we just quickly go back and have a look at the longer term chart that I initially showed, there you can see the 90 Rand support quite clearly. And it's derived from the fact that we had that congestion zone in late 2016, and all the previous tops at that area came in at about 90 Rand. So it wouldn't surprise me too much if any weakness did see the share price moving back down towards 90 Rand here.
All right, so then take us through the mechanics of the trade in a bit more detail, Garth.
All right, so we've gone short at 112 Rand 20. My stop loss is 120 Rand. It's quite loose. The risk per share, therefore, is 7 Rand 80. My risk, I'm taking a 2% risk. Now, keep in mind, we've got 122,000 Rand in our portfolio here. So I'm going to risk 2,500 Rand of our capital in our South African portfolio here, which is 2% of our capital. So I take that capital risk, 2,500 Rand, and divide it by 7 Rand 80 per share. That gives me 320 shares, so I'm shorting 320 CFDs. My targets are 100 Rand and then medium-term target down to 90 Rand possibly. And my risk-to-reward ratio, therefore, is either 1 to 1.5 or 1 to 2.8, depending on which of those two targets you use.
Garth, just, if we talk about a medium-term position for a short, is it not expensive to hold, to be short CFDs, especially when you've got a bit more of a longer-term target? What is the cost implication for someone who's putting on a trade like this?
Yeah, so it's a good question. You actually earn interest when you hold a CFD short position, believe it or not. So it actually doesn't cost you any funding. You actually earn a bit of interest. So to my mind, holding a medium-term short position is absolutely fine, provided, of course, the price goes lower. But it's not like when you're holding a long position where there's an interest cost that slowly eats away at your profits. In the case of being short, you actually earn a little bit of interest daily on your short exposure. And
then the 2% of the account, that is the maximum that you allow yourself as far as risk is concerned.
Yeah.
Why are you that convinced of this trade?
Well, I look at that setup. I look at everything that's happening in the domestic area of the market. It's not looking all that good. And also because I've put a fairly loose stop loss on this one, I felt let's take the maximum risk that we can on this trade and obviously give us the potential to make a larger profit as well, if I'm right.
Yeah. Okay, well, let's look at those portfolios because we are still marking to market, I guess, the theoretical profit of the put spread, and that does look pretty, I suppose, tasty, actually.
It does. So we've got our put spread option structure, which is at the moment sitting with its maximum potential theoretical profit. We've also got our mark-to-market profit there on the two all-me futures that we currently long of. Obviously, that September option structure runs out until the middle of September, so we've still got quite a long time to wait. But it's looking good for us at the moment. The Sibanya, as we mentioned, a loss of 243 Rand there, and then we've gone into the BarloWorld trade this week where we short 320 CFDs. So our South African portfolio is sitting just shy of 123,000 Rand. Remember, we started the year with 100,000 Rand, so that's up 22.8% for the year to date. So that's looking very, very good. Our offshore portfolio has been very inactive, and we're still down 4.8% on this, so not looking good there. I will look to do something here soon. It may well be an option structure on the S&P 500, I'm suspecting. And also gold. There's actually an interesting setup on gold. It's getting quite oversold, and there might be something possibly to do with options there as well. So I've got a few ideas which I might look to explore, but certainly we need to do something on this offshore portfolio.
Yeah, and then just to end off, people can always get an alert as to what's coming up on the show every week.
Yes, please go to traderscorner.co.za and go to the middle of the page where you'll see a link to a free weekly email. And if you subscribe to that, it's very quick and simple. We'll send you an email every Tuesday at lunchtime detailing what is coming up on the show for the rest of this week.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.